Hey, what's going on, guys? I wanted to do a video today about hedge against inflation, whether it's gold, whether it's the Dow. Now, if you want to look at 1929, how could you have owned the Dow? You could have only owned the Dow by purchasing these individual stocks, or if you're involved in the futures markets, potentially if you're there in the pits or you had a relative in the pits, they rolled over the contract. Now, what type of contracts did they have? Beats me. But that was the only way you could have owned the Dow. You could have only owned individual stocks, or you could have owned a contract in the futures markets and continuously rolled it over. Fast forward to today. How can you own the Dow? You can own the Dow via ETFs. There's one, the DIA. So things are a little different than they were in 1929. Now, gold. 1929, if you own gold, well, it was confiscated by the U.S. government if the family member actually gave it to the U.S. government. Some people actually kept it and did not give it back to the United States government because FDR seized the gold. That being said, let's look at $20 an ounce gold in 1929 versus the Dow in 1929 at its top, which was 350. If you want to look at what has done better from the tops in 1929, you could say that the price of gold has actually beat the Dow. The Dow approximately has, not the Dow, gold approximately has a less than 60-fold increase. While if you look at the Dow, it has approximately a 52-fold increase. If you look at it from the top. If you look at a lower price, then you could say, hey, it's much higher than that. But if you look at from 1929 to 1971, gold was $1929, 1971, $35 an ounce. So 75% increase, but you have to remember that increase was in 1933, while the Dow from the top of 359 went close to 1,000 in the 1960s. So you have to see that, hey, the Dow actually beat gold from 1929 to 1971. Now, that being said, from 1971 to the 1980 top in gold, you could see that there was a 1-to-1 ratio where gold was 800-ish, the Dow was 800-ish. You could see a great return on gold in the 1970s, while the Dow remained flat. So for gold holders, if they were able to buy, you couldn't buy until the Ford administration, actually, in 1976. So gold owners, if they owned miners, they did well. Dow holders didn't do so well. Change the topic from 1980, or change the time frame to 1980. 1980 to 1999, 2000, gold did horrific, while the Dow did fantastic. You had approximately 10-fold increase in the Dow. And then from 2000, even up to this day, today, gold has performed better from 1999 to right now, close to a 400% increase, while the Dow has had, it even has not gone 200% to the upside. It's close to it, but it still has done all right. Now, if you want to look at time frames, that is what matters when you're looking at hedging against inflation. If you're looking at it from a short duration, short time frame, then the Dow most likely would be a better hold, buy and hold. Now, gold, you have to wait long periods of time. So for those individuals that love gold and silver, they most likely will retain their purchasing power, or if they aren't able to see it, they're going to be able to pass it down to the kids, and then their children are going to be able to see it. So that being said, you have to consider the time frame, because some people are going to say, hey, gold is worthless, this and that, barbaric relic. Well, all I'm saying is that I don't want to be in cash in the long run. I mean, yeah, you're going to have some cash for savings, but if I'm going to pass down any assets, I'd rather pass down whether it's the DOW ETFs or tangible assets like gold and silver. Another thing to note, if you want to look at some individuals saying that, hey, owning stocks is the way to go because they actually hold more purchasing power over a long period of time. Well, my criticism of that is, well, it depends what stocks. I mean, if you were owning Lehman Brothers stock for long periods of time, you got wiped out. Those stocks went bankrupt. If you want to look at one Dow component, General Motors, from the 1920s to all the way 2008, that stock went bankrupt. Yes, that stock is here again, but you have to remember there was a bankruptcy proceeding. So I'm not in the camp that says buy stocks, buy stocks, buy stocks. If I wanted to own the Dow today, it's much easier than it was in the 1920s. And you could do that by ETFs, like the DIA that I said, or if you want to buy S&P ETF. There are ways to do that. Single levered ETFs, by the way. Gold, you could say that, hey, you know what? Not many people had their gold. It's at Fort Knox. Some people may say that, hey, you want to look at the purchasing power? That's fine. But at the end of the day, not many people have that gold. Good point. Some people actually did pass that down. Putting all this into perspective, number one, know your time frame. Number two, always buy low and sell high, right? Don't buy high and sell at a higher price. But anyways, leave your thoughts below. Tell me what you think. And before I go, I just want to say, over long periods of time, I do believe the Dow and gold are going to retain their purchasing power. It's going to beat cash. Now, the timing of it or how long it's going to take, I don't know. So if you hand off something to your loved ones when you're gone, they're going to maintain their purchasing power, in my opinion, as long as you buy low and sell high. Remember, nothing is guaranteed, and always do your homework before investing. Thanks for listening. Talk to you later. Bye.